Hey, what's up guys? John here. Interest rates on credit cards just hit a record high. It's the highest that they've been in 37 years. 37 years. And so what I'm afraid of, what I'm concerned about, is that I believe that over the coming 6 months, 3 months, we're going to start seeing a lot of people traveling for the holidays, people spending on gifts, Thanksgiving, travel for New Year's. And ultimately what's going to likely happen is we're going to see a lot of people putting those expenses on credit cards. We're going to see increased utility bills. We're going to start to see more reliance on credit cards. And as the cost to borrow money only increases through these credit card companies, it's going to push people into a really, really tight situation. So in this video, I'm going to walk you through exactly what's going on and what you can do about it right now if you have credit card debt, or if you feel like you're kind of being pushed against the wall, to help you build out a plan and a strategy. So in this video, I'm going to walk you through exactly what that looks like. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people. Credit card interest rates hit a record high, and here's what to know. Credit card interest rates reached their highest level in 37 years, according to one measure, rising at the fastest clip on record since the start of the year. The average credit card APR is 19.04%. I mean, loan sharks charge 10-12%. This is absolutely crazy. In the second week of November, according to Bankrate's database, that dates back to 1985, topping the previous record of 19%. In the first week of July of 1991, the rate has jumped 2.7% since the start of the year, the largest year-to-date increase. Now, there was a study done showing that just due to the interest rates, that the increased interest rates over the past 12 months, if you owed $18,000 and you make the minimum payments, you will be forced to pay an extra $5,000 in interest payments alone, just because of the increased cost to borrow money and to service that debt. The rapid rise in rates this year underscores how much the Federal Reserve's effort to fight inflation affect borrowing costs and how quickly interest could accumulate for Americans who carry credit card debt. Increases tied to the Fed's actions typically show up on cardholder statements within a billing cycle or two. Ted Rossman, senior industry analyst at Bankrate, said in a statement, and Fed rate hikes affect new and existing credit card balances. Here's what you can do. First, understand what's at stake when it comes to rising rates. Say you owe $5,000. So here's the example that they give, and here's exactly what I would do if I had this situation in which they're laying out. So they're saying you owe $5,000 in credit card debt and you make the minimum. It would take you 185 months and $5,517 interest to pay off your debt at a 16.3% rate from the start of the year. Now at 19.04%, it's 191 months and $6,546 in interest. That's real money in real time. So the first one, they say it's 185 months. So 185 months, 12 months in a year. It would take you 15 years to get debt free. That's absolutely insane. Nobody's getting rich paying somebody else 19, 20%. Except the person that's lending money at that rate, right? So when you're looking at this situation, a lot of people are in credit card debt right now and they are making the minimum payments. This is probably the worst thing that someone could do is financially, is making minimum payments. You know, I've been in that situation myself throughout the years. Like sometimes I'll do a construction project and I'll put situations and expenses on a credit card, but I'm very, very careful about what I put them on or what I put on this credit card to make sure that I can pay it off on time, because the last thing that I want to do is be stuck paying these huge balances. So I'm always very, very cautious and fearful about credit card use. I always want to use them responsibly, and I want credit cards to benefit me more than it does the credit card company, such as points. There's a lot of rewards and benefits if you play the credit card game. But when they're saying 185 months and you pay $5,517 at the early part of the year in interest on $5,000 owed, what this actually does, the real loss here, is that when you go try to buy a home, banks, lenders, they're going to look at your debt to income ratio and they're going to factor in your debt. So if you're making these monthly installments to this credit card company, they're going to take this into consideration with how much you can afford with a home loan. And so what I would suggest doing if you have a high credit card balance, if you are maybe you have bad credit, is I would really look at your options. There's many credit card companies that offer 0% APRs. So I think there's like 14 cards right now. You have to have a credit score around 700, but if you have a 0% APR card, what I would likely do is if I have a one-bedroom apartment, hypothetically, if I had a one-bedroom apartment and I was sleeping in the bedroom and I was working during the day and I was making the installments, what I would likely do is I'd probably rent out the one bedroom. I'd rent out the room to one of my friends or someone for $700-800 a month. I would sleep on the couch and I would just start working. And then ultimately what would happen is I would make the $200 monthly payment myself like I normally do, and then I'd put all the rent money that I'm getting from that back room, so maybe I'm getting $700-800, then every month I'm paying down $900. And then I do that balance transfer. In 5, 6, 7 months, I'd be completely debt free. And then I'd improve my life, and hopefully during that entire process I was reading and educating myself and potentially growing another income stream or expanding on one, right? That's what I would be doing. I would be reducing my quality of life dramatically to get out of debt, especially high interest consumer debt. I know today with social media, everyone's kind of wants to show the high life and everyone's living great. For me, when I first started out, I mean, it was me and my wife, we were in a bachelor apartment in Westwood in California, in LA. I was spending $830 a month, and at that time I was making a lot of money in relation to my overall expenses. I was always looking for a way in which I can level up, and it's hard to level up when you're paying somebody else 20%, and inflation's at the way it is right now. Rent costs are rather expensive. Everything's expensive, right? And so it's really a time to play defense. It's really a time to play defense. If you need help fixing your credit, you want to do a balance transfer, you need to improve your situation so that you can qualify for a balance transfer, we'd love to give you a free consultation at CashNow.Video, or call us at 561-430-5900. They go on to say, one way to reduce those balances to quickly sign up for a balance transfer, like I suggested. The thing is, there are some cards that will charge you a 3% balance transfer. So there's 13, 14 cards that won't charge you, but there are some people will say, oh no, there's a 3% balance transfer. If there's a 3% balance transfer on $5,000, I mean, it's worth spending a couple $100. If you're going to spend $5,000 to $6,000 in just interest, and you're going to be locked in debt for the next 15 to 16 years, that's going to impact your ability to qualify to buy investment properties and to move forward in life. That's worth it, right? It's probably 1 month's worth of interest that you're already going to be paying anyway. Automating your monthly payments from your checking account for recurring bills and paying more than the minimum is the ticket to getting a grip on debt. Another way in which you could do it is to bulk shop at Costco, to bulk shop to buy everything that you need, and to reduce the amount that you're going out and spending money. I'm just a huge advocate right now. I personally believe that we're going to see a massive opportunity to invest, a massive opportunity to increase your investment power and your purchasing power and your ability to multiply wealth over the next 1 to 3 years if you're really smart and strategic. I just personally think that credit card debt and these high interest loans that are out there right now are going to keep so many people down if they're not aware of what's actually happening and building out plans and strategies to escape it. Alternatives also include low interest rate personal loans. You got to be very careful with any type of personal loan. Perhaps as low as 6% over 5 years if you have strong credit. If you have multiple balances across several cards and balance transfer cards, personal loans won't cover the total debt. Even with debt consolidations, there's certain things in which can increase your situation and can increase your things can get a lot better for you. However, with debt consolidations, you want to be very, very careful. A lot of people are doing debt consolidations because they might have 5 or 6 different debts across different credit card companies or personal loans. But just because everything was consolidated into one company does not mean you're in a better situation. Just because it feels a little bit more organized, if you're paying a large fee and your interest rate is not being greatly reduced, it doesn't really matter, right? So really pay close attention to how you're spending your money, where you're spending your money, and think really long term about the changes that are coming to this economy, because I personally believe we're going to be stepping into a situation where interest rates are going to continue to rise. I believe the Fed is likely going to continue to increase rates, and as they do, what's ultimately going to happen? Interest rates on credit cards, interest rates to service debt is only going to likely continue. And as that happens, we're going to start to see more and more people defaulting on their credit cards, which is going to impact their ability to obtain a mortgage because it's going to impact their credit score, right? Banks generally, look at recessions, 2008, 2009, 2010. What did banks do? They tightened up on lending. They only lent money to the highly qualified borrowers with great credit scores, cash in the bank. And why did they do that? It's because they suffered massive losses in the years prior. And we look at what's happening now. We have record high housing debt. We have an environment which we just left with nearly 0% interest rates, 3% interest rates on 30-year fixed, which is essentially zero. It's like free money. That's all gone. Insurance is going through the roof, property taxes are going through the roof, jobs are getting cut, 49% of small businesses missed October's rent. You start to add everything in. When you have, look at it this way, 32.5 million small businesses in America, and you have 46% of Americans working for a small business. So nearly half the country is working for a small business, and 33% or almost 40% of which is not paying October's rent. What are we going to start to see? We're going to start to see a smaller pool of qualified buyers that are going to be able to go out there and invest in real estate. So my suggestion, pay very, very close attention to how you're spending your money. Look at your credit cards. Ask yourself if you're in a good situation. If not, I personally would suggest pulling back on the lifestyle a little bit if you have to, if you have the ability. Pull back on that lifestyle. If you have that one-bedroom apartment, maybe rent out the room to your best friend or to one of your friends. Go on the couch for 6 months. It's not the end of the world. Doing things like this it's going to, I think you're going to have a 1 step backwards, 3 steps forward. That's what I ultimately think. Be really smart and strategic. Huge opportunities coming for the smart and savvy entrepreneur and investor, and just American that's really looking to move their life forward. I think the world's going to get much, much tougher, and I think we're going to watch the middle class get completely dissolved, unfortunately, over the next 3 to 5 years. And if you are very, very smart over the next 3 to 5 years, or even 1 to 3 years, you will start to see yourself really start to rise the ranks. But it's going to be very challenging to do it, paying somebody else nearly 20% to borrow money. Drop your comments below. If you need help fixing your credit, we would love to help you at CashNow.Video. That's CashNow.Video, 561-430-5900. And I'll see you guys in the next video.